There's a growing conversation right now about the Fed's role, about whether it's driving wealth inequality, whether it's driving asset prices into dangerous territory that could pop right in our faces, and whether the financial system can withstand that. I mean, there are these seemingly legitimate questions about being in what seems to be uncharted territory.
These questions come from people who are keen Wall Street observers or Wall Street. I never have once heard this line of questioning from a member of Congress that represents a low-income or minority district. Never once. They come to us and they say, why can't you do more? They never say, oh my gosh, you're just benefiting Wall Street. You know, raise interest rates because I want to keep Wall Street in check. They say, help my constituents find work. So that's why, I mean, I find these questions amusing because I hear them all the time from Wall Street. And these are folks who don't care about what's actually happening on Main Street. I don't hear it from Main Street. I certainly don't hear it from low-income communities. And I've heard all of these questions before.
Good evening, Ape Nation. Guys, what is going on? It is Friday, January 21st, 2022. AMC, as well as the rest of the market today, continue to bleed. That $21 price, we never even came close to it. So I hope you guys didn't think about that too much today. But I'm wondering how many people sat there and watched the line today. How many people engaged in psychological warfare with the hedge funds? And, you know, I know on this channel I like to point the fingers left and right a lot at other YouTubers. And that comes with the territory with this play. But in all reality, my biggest gripe starts with the people at the top. The people who are in charge of making the legislation and setting the rules for the way that the stock market runs. Now, when our founding fathers created the three different branches of government, executive, judicial, and legislative, the legislative branch was Congress, and that was supposed to be a voice for the people and how we would keep the checks and balances between the other two branches of government, the executive and judicial. And we also know that Congress are the overlords of the SEC and the Federal Reserve. The people who work in those two departments answer to Congress. And so if things aren't getting done on the surface, then you have to look at the underlying factor. And that says, how do we get into this position? How is it that Congress allowed the Fed to run amok with inflation and money printing beyond anything we've ever seen? And also, why is Congress allowing the SEC to continue to let some of these things that the retail community, the ape community, has brought to the forefront, shed light on the shady practices going on Wall Street? And there's only one reason for that, and that is money. Now, as far as that subject matter goes, I want to get into that sometime in the future when we have more time, because tonight I want to focus on where people said 6 months from now we would be. Where were the experts predicting that the market was going to be right around this time, about the turn of the year? We've heard a lot of stories out there that retail has thrown a monkey wrench into the stock market. And really, it's retail's own fault that the market is crashing and that we're all losing money on our high-tech stocks and our meme stocks. But is it really retail's fault what's going on right now? That's what we're going to get into tonight. So, without further ado,
cue the speeder.
This is the way.
Okay, and tonight I want to start off with the prediction that was made by Jeremy Grantham. If you don't know who he is, he's a British investor who co-founded and he's the chief investment strategist of Grantham, Mayo, and Van Otterloo, GMO, which is a Boston-based asset management firm. He has, or his company has, over $118 billion in assets under management as of March of 2015. So I can only imagine what that is now. Where did Jeremy Grantham say that we would be right now as a whole, the stock market itself? What were the things we'd be facing coming up this year in 2022?
Cue the video.
They have the housing market, the stock market, and the bond market all overpriced at the same time. And they will not be able to prevent, sooner or later, the asset prices coming back down. So we are playing with fire because we have the three great asset classes moving into bubble territory simultaneously.
To the critics, the Fed was sending the wrong message, rewarding the wrong people.
Over the years, we've been trained to believe that the Fed is on our side. What the Fed has trained us to believe is that if we make a bet in the market and we win, we're on our own. We get to keep the profits. If we lose, they will bend every effort and every dollar they can get their hands on, one way or another, to bail us out. This is asymmetry of the most splendid kind.
So guys, if you want to have a better understanding of how Wall Street was able to short GME 140% back in January, well, Jeremy Grantham is telling you right there, when you are too big to fail or too big to lose, and you know the Fed is going to have your back with some type of bailout or whatever it may be, then you can make risky and wild decisions and not fear the consequences. And even though they didn't have to get bailed out back in January of last year, when they ran up the price of GME, well, they did something that's never been done before in the history of the stock market and simply decided just to take away the buy button and retail's availability to buy the stock. And again, we find ourselves in uncharted waters, something that's never happened before in the history of the market. Now, guys, I'm not going to keep you that much longer, but I want to leave you with this clip so you can kind of understand where the inner workings of the Fed and the way it's been set up have been pitted against retail since the jump.
Cue the video.
Clap it off, please.
Billionaire bond investor Howard Marks called the Fed out at the time, saying it was undercutting the way the free market is supposed to work.
There are negative ramifications to this, one called moral hazard, which means conditioning people to believe that if there's a problem, the government will bail you out. And if people really believe that, then there's no downside to risky behavior. Because if there's a problem, it won't fall on you, you'll get bailed out. If you play it aggressively and succeed, you make money. If you play it aggressively and fail, you'll get bailed out.
So has moral hazard gotten worse as a result of this bailout?
There's no barometer of moral hazard, so I can't give you a reading. All I can say is that for the last year or so, risk-taking has been rewarded, and that tends to bring on more risk-taking.
So guys, I think Howard Marks said it best there. We are in unprecedented times as far as it goes with risk-taking and people being rewarded for risky behavior, even though that risky behavior is causing pain. And so guys, until we see some changes coming from the top down, why is Wall Street going to stop what they're doing? It's making them extremely profitable. They're in a no-lose situation. They know if they do lose, they're going to get some type of bailout. And like Howard Marks said, that creates and promotes risky behavior, as we have seen very clearly in the last year and a half. And so guys, if you really want to make change, we got to start talking about who is in the position to make change, because it's not YouTube creators. It's not individual retail investors. It's going to have to start at the top. All right, guys, I'm going to leave it there for tonight. Thank you so much for all the comments, the views, everyone who's been hitting the like button. Thank you. I appreciate each and every one of you. Thanks for new subscribers. Everyone who's new to the channel, welcome. And I hope you guys enjoy the rest of your evening. This is Ape Nation. I'm the Massalorian, and I'm out.